While the world's biggest economies were pumping the brakes in 2024, one small country in the Balkans decided to hit the accelerator. We're talking about Kosovo, and its performance has turned into one of the most surprising economic stories of the year. So, let's dig into why.
First, let's just set the scene. 2024, it was a pretty tough year for the global economy. The Central Bank of Kosovo's own report points to rising trade tensions, a whole lot of geopolitical uncertainty, and a major slowdown in the Eurozone. For most countries, it was a time to be cautious, with very modest growth, if any at all.
But while the rest of the world was slowing down, Kosovo was doing, well, this. The exact opposite. It was actually accelerating. Which, of course, makes you wonder, how on earth was that possible?
The whole story really starts with this one number, 4.4%. That was Kosovo's real GDP growth in 2024. Now, to put that into perspective for you, the Eurozone, one of its most important trading partners, grew by just 0.9%. So yeah, this is the central mystery we're going to unpack.
So the answer wasn't some kind of external miracle or a lucky break. Turns out, the economic engine was running hot right from the inside, powered almost entirely by strong domestic demand.
And all these factors created this really powerful, self-sustaining cycle. You see, with lower inflation and rising wages, people felt more confident about spending money. And that confidence, in turn, encouraged businesses to invest more. All the while, exports held up pretty well, keeping a steady stream of money coming in. It was a really potent domestic mix that was, for the most part, insulated from that global slowdown.
Okay, but for people to consume and businesses to invest like that, you need financial fuel. You need money. So the big question is, where was all this cash coming from? To understand that, we have to pop the hood and look inside Kosovo's financial engine. And when you look, wow, the country's entire financial system is just completely dominated by one sector, banking. I mean, it holds over 2/3 of the total assets. This means it's not just a part of the economic engine. For all intents and purposes, it is the engine. Sure, pensions and insurance are there, but banking is in a whole other league.
And here's the crucial detail. That massive banking sector, the engine driving the whole economy, is overwhelmingly foreign-owned. The central bank report specifically notes that capital from the EU, Albania, and Turkey are the main players here. Now, this isn't necessarily a good or a bad thing, but it's a critical piece of the puzzle to keep in mind as we move forward.
All right, so we've got this powerful, foreign-owned banking sector. How did it manage to pour so much fuel on the economic fire? Well, it did what banks do best. It started lending. But in 2024, it did so on an incredible scale, creating what we can only call a great borrowing boom. And the growth here was just explosive. While loans to businesses grew by a very strong 15%, lending to households, well, it skyrocketed by 22%. That is a massive, massive injection of credit directly into the hands of consumers all in a single year. And this wasn't just numbers on some spreadsheet. This was real fuel for mortgages, for consumer goods, for people investing in their own small businesses. The report makes it clear that this credit boom directly financed that strong consumption and investment we saw earlier. It's the missing link that connects everything.
This kind of crazy fast growth always raises a critical question. When people and families borrow this much, this quickly, are they taking on more debt than they can actually handle? Is this growth truly sustainable, or is it just a bubble that's waiting to pop?
The central bank actually ran the numbers on this. Their analysis shows that while about 70% of borrowers seem to be managing just fine, that leaves nearly 30% who are considered at risk, critical, or even insolvent. Now, the bank does add a really crucial note here. They say this figure might be an overestimation because the data doesn't always capture a household's total income. Still, it's a number that definitely makes you pay attention.
So you see the tension, right? You have this incredible growth, but it's fueled by a borrowing boom, with some potential risks simmering just below the surface. And this brings us to the final and probably most important question of all. Is the financial system itself stable enough to handle all this pressure?
To answer that, we need to quickly learn a key term that bankers use to measure risk. It's called a non-performing loan, or NPL. In Kosovo, you'll see it referred to as KJP. Put simply, This is just a loan where the borrower has stopped making their payments. So a high NPL rate is a major red flag for any banking system.
And here we have another huge surprise in Kosovo's story. Despite that massive surge in lending, its NPL ratio, the rate of loan defaults, was just 1.9%. That is exceptionally low. I mean, it's significantly better than the average for the entire Western Balkans region. It suggests that, for now anyway, people are actually paying their debts back.
This all brings us to the official verdict from the central bank's governor, Ahmed Ismaili. He basically says that the system is resilient and stable, but, and there's always a but, they need to keep a very close eye on those global uncertainties. It's a pretty clear message of cautious optimism.
And that cautious optimism isn't just talk. The central bank actually ran stress tests, think of them like financial fire drills, where they simulate major economic crises. And the conclusion was that Kosovo's banking system is, in fact, strong enough to withstand even severe shocks. It has enough capital and profit to absorb potential losses.
So where does all this leave us? Kosovo is just a fascinating case study of an economy in overdrive in a world that's stuck in neutral. It's running on the high-octane feel of borrowed money. And while the engine seems robust and the drivers are paying their bills for now, it leaves us with one final crucial question for the future. Can it use this boom to build a truly sustainable economy before the bill for all this borrowing finally comes due? That's the billion-euro question at the heart of Kosovo's economic gamble.